So here's mine. I'm going to obscure the number. So this is my official procurement card. Well, thank you, Piero, and thank you, Christine, for putting innovation on the agenda for this very important conference. And as central banks, we're not simply spectators in innovation, and this is a topic where the central bank can really play a very big role in innovation as a driver, and thereby promote growth and stability. So this is very much in that spirit. This is an interim report on some ongoing work based on the unified ledger, and I can get into some of the more details at the right time. But it's worth just reflecting on the history of money and where this project actually fits. Because if we look at history, innovations in the monetary system have always coincided with big leaps in economic activity. And I think the biggest innovation, the most important innovation, was money in the form of book entries maintained by trusted intermediaries. And that really was given concrete form in the form, through the public deposit banks in Europe in the 17th and 18th centuries in particular. And, this was the beginning of the idea of settlement. The settlement concept turns out to be really important in the monetary system. And once it's in the book, that transaction is settled. And the institution of settlement really allowed the flowering of trade and commerce through financial instruments that are ultimately settled on the bank's balance sheet. And indeed, these public deposit banks were the precursors of modern central banks. And we still see all of these initial ideas still playing out. The difference, of course, is that now everything is digital. But the architecture is very much the same. And the question is, what is next? And as Piero said, it has to be the next leap in the monetary system, which is how do we incorporate additional features in the monetary system? How do we take settlement one step further? How do we actually make it so that it can actually function in a way to expand the space, the universe of possible economic arrangements? So in the language of economic theory, how do we expand the universe of possible contracts that actually can increase the range of things that we can do? And the central bank is absolutely at the core of it. So don't be put off by the term tokenization. What it means is the monetary system is able to incorporate the contingent performance of actions. You can actually make conditional payments. You can actually make payments conditional on, let's say, someone else's action, as well as a state of the world. And a very simple example would be payment versus delivery. So we have a seller and a buyer, and of course, each side is happy to play their part, provided the other party to the contract fulfills his or her end of that contract. And it's the ability to make credible promises which is made possible by having a payment conditional on delivery and delivery conditional on the payment. So it's that sense of being able to do more things through the contingent performance of actions. So here, I've just drawn this in terms of a flowchart. And the green diamond, as you know, in a flowchart is an if-then statement. If this, then you do that. Otherwise, you do that. And as Piero kindly referred to one very attractive way of implementing tokenization is to have central bank money right at the center of the platform as the settlement asset. It's the ultimate anchor. But the consumer-facing, the user-facing form of money is going to be in the form of deposits. And they're going to be provided by private sector institutions. And you may have other types of claims on the same platform. And by bringing all of this together, what you can do is to have all of these contingent contracts that can codify all of the promises that the financial system, society at large, can actually perform. And in the 2023 BIS annual economic report, there was a chapter on how we might be able to do this through a so-called unified ledger. It's a ledger because it's in the spirit of the public deposit banks, like the Bank of Amsterdam in the 17th century, but it's unified in that we have not only central bank money as the settlement asset, but also commercial bank money, as well as other types of claims. And what this gives you is our current two-tier monetary system, from, by design. So rather than sending a stable coin, and so if I send a stable coin to someone, the receiver acquires a claim on the issuer. What settlement does, of course, is that when someone sends you money through the bank, you simply see an increase in your deposit balance. And so this picture illustrates that. So here, John is paying Paul. They bank with different banks, and the central bank is in the background. And the payment extinguishes the deposit in the sender's bank, but increases the balance in the receiver's bank. And in the background, there's settlement on the central bank balance sheet. And this is very different from a way that a stable coin would operate. And because all payments are settled in central bank money, the singleness of money is guaranteed by design. Now, of course, another way of doing this would have been to use stable coins and the crypto ecosystem. But I won't spend too much time on that, and maybe we can come back to it during the discussion or during the Q&A. But suffice to say that for the well-known problems to do with the costs of maintaining decentralization, the crypto rails are prone to fragmentation, and that tends to undermine the network effects of money. And because we have viewers from Korea, let me just reiterate what I said at the, during my confirmation hearings, that I support the introduction of a stablecoin framework in Korea. But at the same time, tokenization is best done using central bank money. Now, with that out of the way, let me tell you more about the project. So the project is called Hangang, and it's named after the river Han that flows through Seoul. And you see that, the etymology of all of these things, you'll see there's a very interesting parallel when I get to the ECB project. And Hangang is constructing a unified ledger. We put a different name to it. It's called a digital currency system, but it has central bank money as the settlement asset. We have tokenized deposits. And then, depending on the application, there are different assets on the platform. Now, one question that arises immediately is, how are you going to provide central bank money on the platform? And there are two ways of doing this. One is to link whatever platform that you have with the current real-time gross settlement system, the RTGS system of the central bank. and then make sure that there are triggers that go back and forth so that when there's a transaction on the platform, that triggers a payment, or that triggers a settlement on the central bank balance sheet. And that's certainly one way to do it. And indeed, this is very much the way that the ECB is pursuing the first step of its tokenization initiative, which is Project Pontes. And the idea is that this is, of course, the benefit of doing this is that it's much less onerous in terms of a new platform. But you are paying a cost. You are paying a cost of limiting the types of contingent actions to things that are compatible with the current RTGS system. But it's a very, very important first step. And the ECB is thinking of this very much in terms of an interim step. But of course, there is the ultimate goal, which is to have central bank money on the platform. And it's by doing that that you're really going to be able to harness programmability in its full sense. If you do it through the various triggers, there are the usual problems to do with, what about the latency? What about the types of, how refined can the instruction be, and so on. On the platform, the only thing that's limiting you is how creative you are. So there's full atomic settlement. And this is the vision behind Project Appia, which the ECB, I think the blueprint will be out there in 2028, Appia. Appia, as you know, is the famous Roman road. So you see that there's a little bit of a theme here. There's the Roman road, there's the bridge, and then there's the river. So it's you see the very consistent theme. Now, what we did in Korea is to go straight to that second solution. Without going through the RTGS intermediate step, we're going straight to the full platform. And we're putting central bank money on the platform through on and off ramps. So what the bank does, what a commercial bank would do, would be to take some of its reserve balances at the Bank of Korea. What the Bank of Korea does is to move some of that money to a separate sub-account. And for every one that's in the sub-account, there's a tokenized version of central bank money on the platform. And then we have everything on the platform. The money is frozen in the sub-account. So there's no net money creation. There is the need for additional liquidity, and I'll come back to this because clearly there's going to be a fragmentation of liquidity in this sense. But the beauty is that everything just transfers from standard deposits to these tokenized deposits. So the usual rules on reserve requirements, deposit insurance, and prudential regulation all transfer over to tokenized deposits. Now, one way that we design this is to have a separate value layer where all the claims are circulating from the actual detailed programming, because it turned out that that was much simpler and it was much better for operational risk. But it doesn't have to be like this. You could have it all in just one ledger. Another choice we had to make was, of course, technically everything is feasible, but in terms of the institutional background, the institutional backdrop, there are governance issues that need to be handled. So in particular, depending on the particular asset, there will be other interested parties that need to be involved in having tokenization. For example, if it's government bonds, you need the Ministry of Finance, you need the centralized securities depository, and there are many, many different pieces And those need time to actually sort out and put onto the same platform. Now, we completed the first phase last year, and this was actually a live trial. We had 7 commercial banks, about 80,000 users, and around 12,000 merchants. We had a very well-known supermarket chain, convenience store chain, etc., etc. And I think what we learned was that the unified ledger actually can work at scale in real transactions. And for the user, it's very much like just using a standard payment app. And because the merchant fees, and because we don't have credit cards, debit cards in the middle, of course, for the user and for the merchant, they can actually skip over those fees. So this was a tremendous cost saving for the merchants involved. What we're doing later this month, so at the end of July, we're launching phase 2. And here the big theme is the implementation of public spending. So in particular, disbursements of public funds. It could be in the form of procurement, and the examples I'll give you are very much in the form of procurement. But it could, if you want to, use this type of system to disperse benefits as well. But I think this is where you see the full power of tokenization. Now, the government has a plan to use the tokenization platform that we have to disperse a quarter of all the central government treasury payments by 2030. So a quarter of all central government spending will go through this system by 2030. That's the objective. And let me give you one example of how procurement becomes much easier if you have tokenization. So in Korea, we have a very ambitious program to lay out a national network of electric vehicle charging stations. And we've set standards, but then of course the work has to be done by the private sector. So the question is, how do we enforce standards, make sure that the money goes to the manufacturers of the charging stations, the building firms that will build the infrastructure in a way that is going to be free of the most egregious forms of fraud and misuse, etc. And of course, it's going to be very, very difficult to check these things ex post. So why don't we program it ex ante? And that's what we are going to use it for. Now, this is the current system. So we have a fund which will fund a subsidy for these new EV charging stations. And there are the charge point operators. These are the firms that will organize the building of these things. But of course, there are subcontractors that will actually do the work. So the manufacturers and the builders who will actually build these things. And we want everything to be up to standard. And so only some only some types of chargers will be eligible. So how do we do this? Well, of course, we can program it. And we don't need to pay the operator. We can go directly to the subcontractor. So to the manufacturer, to the builder. And that way, these firms, in turn, will see working capital. Their working capital situation improve tremendously as well, because they're getting money directly without having to wait for the intermediary. And then the qualification can also be programmed in from the start. Of course, this is a very, very small example of what can be done more generally. And government procurement, as you know, can be very, very complex. And ex-post verification just is not really a very useful way of going about it. Another example is something very close to home, which is, as public officials, the Korean civil servants, even the central bank, were issued a official payment card that we use in the course of our daily business. And that's also a form of procurement, because what you're doing is you're procuring services. So here's mine. I'm going to obscure the number. So this is my official procurement card. And of course, you can use it to entertain, guests for your official business, or for travel, or for hotels and so on. But it's going to be. But of course, there are very strict rules about what's allowed and not allowed. And how do you enforce that? Well, currently, it's all enforced through ex-post verification. And that's very, very time-consuming, very tedious. Of course, we can program everything so that it only works, your card only works for approved purposes. And thereby, you can skip a lot of the intermediate checking steps. So this is the spirit. You can harness programmability. You can harness tokenization to program in conditions ex ante, rather than having to check and verify ex post. And for the economic theorists in the room, we know that the ex ante equilibria are much larger than the set of subgame perfect equilibria, ex post equilibria. You can achieve a lot more if you have the ability to make credible promises that you cannot if you only have to rely on ex post incentives. So looking ahead, of course, I've given you two very small examples, but that's going to be the spirit of the projects that are coming up. Of course, the big prize is tokenizing government bonds. And this is not only about developing the capital market, it's also about implementing monetary policy. Because think about what's involved in a repo transaction. You need to verify the collateral, you need to credit the account of the asset provider, and you need to reverse that transaction at the right time. And these things are just much easier, much less prone to mistakes if you have everything tokenized ex ante. And since Pablo is here, let me also say something I feel very much attached to this project, which is Project Agora. I was very much involved before I left the BIS. But this really is a very, very promising system. It really is the next generation of the international monetary system. And the way it works is every jurisdiction has its own national ledger, its jurisdictional ledger, and the jurisdictional ledgers are themselves connected via the unifying ledger itself. Currently, it's the US dollar, the euro, the yen, pound sterling, Swiss franc, Korean won, and Mexican peso. But I see TIFF, Canada is joining this year, so there'll be 8 central banks involved. And with Project Hangang, I can confidently say the Korean jurisdictional ledger is done. So we just need the other jurisdictions to come along, and we can just plug in. Anyway, thank you very much, Christine, again. Thanks for the invitation. Very much look forward to the discussion.